welcome to Market Fatafat. I'm Avand. Vash, as the name of the show suggests, this is a show where we get you all of the top all of the top stocks that are buzzing away in trade, and it's all in a matter of 30 minutes. You've got 30 stocks that we will be flagging off, and we have our team of research analysts who are joining in right now to give us a lowdown of all that's buzzing away in trade today. In addition to that, we have Rajesh Palviya, Head of Technical and Derivative Research at Axis Securities, to give us some technical trends as well. Well, let's get the ball rolling and start off with all of the buzzing stocks in trade. It's quite a tempered market, and there's Hindustan Copper, which is certainly feeling the heat, Mubina, on the back of its numbers.
Well, and rightly so, because the numbers look pretty weak. In all probability, it may have to do with a volume movement in the quarter gone by. We have a top line degrowth of 38%, coming in at 382 crore rupees. Not just that, the EBITDA as well. While of course it has declined, the quantum of decline compared to sales has not been that much, which has led to a margin expansion to come by from 16.9% to 21.1%, and the bottom line as well, on account of the decline in operational profitability, has degrown by a good 46%.
Oh yes, indeed, and that clearly seems to be weighing down on the stock. As we speak, it's down by about 6% in trade. Well, speaking of stocks that are under pressure, take a look at Avanti Feeds, staring at a 7% downtick. Let's find out what the outlook is from here. The stock is at an 8-month low, Rajesh. How are you reading the charts?
Stock is given to pick up its important
a little bit of a bad audio line, but nonetheless, that stock is at an 8-month low, seeing a bit of a downtrend, and as we speak, 1620 is where it's currently at. Well, nailing it down to all of the top movers and shakers in trade today after Avanti Feeds, there's KNR Construction seeing some reprieve, Karanya.
Actually not. We're seeing the gains that it did manage to clock in earlier on the day have been reversed. There's been some amount of profit selling, I believe, but yes, the numbers have been very strong for the fourth quarter, and that's why we saw a good rally in the first half of the session, but clearly that has been reversed, making it a 3-day cracking for the stock on the chart.
Okay, that's clearly under pressure. That green that we saw is just a mild aberration, and the stock as we speak is back to its losing ways at 288. Meantime, let's find out what kind of earnings Berger Paint delivered, and Pranay, run us through the numbers.
Well, actually, the numbers were not bad, but the stock has been soft in today's trade. It was down about 3 to 4%. But if you look at the numbers, they're actually good. Revenue growth of 17% is ahead of peer Asian Paints, which grew at 15%. It also managed to expand margins by 90 basis points this time, thanks to the input tax credit as well as lower other expenditure. And going forward also, the word from analysts is that its growth will be faster than Asian Paints.
Okay, but despite that, it looks like the stock is under a bit of pressure as we speak. It's at about 295 in trade. Well, let's move from paints to banks, and ICICI Bank is clearly under pressure. Lots of overhangs needed.
Definitely, Avan, it has been losing for third consecutive day now, as the bank has to conduct an independent inquiry against MD and CEO Chanda Kochar, as an anonymous whistleblower filed a complaint against the conflict of interest and violation of code of conduct against Chanda Kochar, and this was noted, or this step was taken right after SEBI had served a notice to both the bank as well as to the court.
Okay, let's move right on then and focus in on a stock from the broader end of the market that's clearly under pressure. Take a look at Manpasan Beverages. 7 straight days and the selling pressure has not abated. As we speak, the stock is staring at a downtick of about 9%. Let's get in Rajesh's view. Rajesh, what does one do now?
The stock has given the breakdown of its important support area of 260, and I feel that stock will continue its downward move towards 200 or 180 level. So I advise one should avoid this stock at the current juncture. Some support action has to come in the stock, then only one should look at to buy the stock at the lower price. So I feel 200 or 180 level can be the lower side of below 260 level.
There you have it. That's the view coming in on Manpasan Beverages. Clearly, you're seeing an overhang playing out on the stock on the auditor's exit. Meantime, it's been a pretty fabulous set of numbers, and that is for Bharat Dynamics. The stock has delivered on all fronts with the profits growing 3 times, sales coming in at 2,021 crores. It's up a good 22%. A stellar set of margins at 19% with the EBITDA growing 121%. So clearly all A-OK. Not just that, we spoke to the management today on ET Now. They're confident of sustaining their margins at the current levels. They're saying the product lines have performed very well. There's big orders in the pipeline, and therefore this kind of traction is only likely to continue. The stock upbeat in trade today. Meantime, let's get down some of the other stocks that are making waves in trade today. And McLeod Russell down 3%, Karuna.
Yes, and that's because of the poor set of numbers that they delivered yesterday. The profits have, rather the losses have widened to 142 crore rupees versus 108 crore rupees. Revenues have been completely flat, so clearly no year-on-year growth witnessed, and that's why we're seeing the investors giving a thumbs down.
Okay, clearly under pressure. It's not been an encouraging set of numbers, and therefore the stock is suffering. But what else is moving on the screens? Take a look at J&K Bank. It's a 5% up move. Clearly, Mubina, lots to cheer about when it comes to numbers.
That it is, and J&K Bank certainly has been able to do very well compared to many other banks, smaller banks especially. The NI has been more or less flat, but there's been great performance when it comes to asset quality and bottom line. In fact, in the provisions front, the company has actually been able to decrease its provisions from the previous quarter and the corresponding quarter, and that is something that may have led to the gross NPAs as well declining from 10% in the previous quarter to just 9.96%, but it was at more than 11% in the corresponding quarter. So there has been an improvement in the asset quality, and it's something that's also caused the company to post a profit on the bottom line at 28.4 crore rupees, but this versus a loss figure of a whopping 554 crore rupees in the corresponding quarter.
So turnaround clearly evident, and the stock is definitely seeing a smart cheer as we speak. Meantime, let's move right on. Midcap IT then, and Siddharth, NIIT Tech in focus.
Well, if markets are bullish, IT is moving up. If markets are bearish, still IT is moving up. And in a sideways market too, IT stocks are doing well. And NIIT Tech, KPIT, these are the stocks which are adding a lot of open interest today. NIIT Tech is doing well in cash volumes are also substantially high. Built up is significant. Rollovers are strong, clearly suggesting that this momentum which is there in IT since quite some time would continue. And NIIT Tech is leading mid-cap front.
Okay, there you have it. That's the view coming in. It's clearly IT. That's your bellwether in the markets, despite the kind of direction it takes. And no wonder you're seeing some of the mid-cap IT stocks clearly grabbing eyeballs. 3% higher on NIIT Tech at 1120. That stock is certainly moving smartly in trade today, and as Siddharth flagged off as well, you've got pretty smart volumes backing it up, so above the yesterday's level. Well, let's take a little bit of a detour on Market Fatafat and connect with the management of PFC. There's been high quality asset quality stress this quarter. NIMs under pressure. Profits have though come in at 936 crores versus a loss. That is Mr. Rajesh Sharma, Chairman and Managing Director, standing by. Thank you so much for joining in on ET Now. Well, to begin with, the net interest income and profits have come under a little bit of pressure. Can you tell us what that can be attributed to?
As you know, there is some stress in the sector, and my loan book is 2,80,000 crores, out of which 82% is government utilities and 7% private sector is also perfect. We don't see any financial stress there. Remaining 11% are projects which are stressed, and we are trying to address that stress in different projects differently. Recently, 12th February circular of RBI, though it was not applicable to NBFCs, but as a responsible and prudent corporate, we have implemented this. Because of this, about 12,000 crores projects we have to classify as NPA. That's why we are not booking income on those projects, and that's why that total income has come down and profit in the last quarter has come down.
Overall, what's your guidance for the FY19 gross NPAs? What is the incremental provision that you think you can maintain?
So different projects we are handling in different way. We have a different strategy, but we are making sincere efforts just to bring to your notice that we have revived 3 projects, Dense Energy and Siga Energy. These are hydro projects in Sikkim. One is 96 megawatt, another one is 97 megawatt. They got PPA with Haryana government with our sincere efforts of our management, and now they have started supplying power to Haryana. Similarly, Ratle hydro project in J&K, we have had deliberations and dialogue with GVK Power with their developed promoters, and we have been able to resolve that also. 11 crore per month they are paying to us, and final settlement agreement is to be signed within 15 days.
Exposure to NCLT cases, and can you tell us what is the kind of provision that you have towards NCLT?
Actually, some projects have already gone into NCLT. About 8,000 crores projects have already gone, and at this juncture it will be very difficult to assess that how much haircut will be there. But as and when we approach there, we will be trying to get the best possible price depending on the quality of assets and whether the project is having PPA or not, whether the project is having FSA or not. So there are 38% provisioning in these projects have.
Your margins too have come under pressure due to the interest reversals. Do you think that your net interest margins can improve from the current 3.85%?
Cost of fund last year we have been able to reduce by 36 basis points, and margins we will be able to maintain. This year our interest spread was 2.77%. I expect 2.5 to 2.6% is interest spread this year also.
Alright, we wish you all the very best. Thanks much for joining in and giving us a view on the quarter gone by as well as the outlook going forward. 80 is where the stock is currently at. But let's get right back to Market Fatafat. We're winding it down to all of the stocks that are trending and buzzing away in the session today. And let's take it across to another earnings candidate, and that's Mishra Dattu. Pranay.
It's seen a revenue growth of 14%. Profit growth is also robust at over 70%. And this is reflected in its operating performance, which is why you're seeing margins expanding more than 1100 basis points year on year. So the specialty metal company has now posted EBITDA margins of over 37% versus close to 26% that it clocked a year back.
Okay, let's keep the pace going. Reliance Communications, 5th straight day on the trot, and it's active. Nilu.
So much positivity around the stock because NCLT has put the insolvency proceedings on hold for Reliance Communication, and Ericsson and Reliance Communication also seem to have put their dispute, they've settled their dispute rather, and then NCLT also allows the banks to go ahead with the Reliance Jio and Reliance Communication deal. So there's a lot of positivity around this stock.
Oh, it certainly is, but anything but positivity when it comes to V-Guard. Let's take a look at the kind of quarter they delivered. Margins contracted quite substantially to 5.7% versus almost 9.3% last year. The EBITDA was down 34%. Not just that, profits as well have declined by 29%. Top line growth, the only redeeming factor, though a little bit muted, up by 8% at 658 crore rupees. There have been some new product innovations, but the street is not impressed, and clearly a big thumbs down on V-Guard Industries, 5% off. Meantime, Pranay, let's talk about Torrent Pharma. What's up with the earnings?
Actually, it's done better than some of its pharma peers, this time posting revenue growth of about 20%, and operating profits have grown a tad faster at about 23%. So it's improved its margins by 50 basis points this time. More importantly, going forward, the management has said that growth is now coming back in US. They are looking to launch at least 10 products in FY19 and looking to file 15 to 20 actually over there. When it comes to domestic markets, they will see faster growth thanks to Unichem integration.
Alright, that's the word coming in. Torrent Pharma is looking active. Meantime, DHFL, Siddharth?
Strongest stock in NBFC space, and especially housing finance space, which is weak among NBFC volumes are crossing, previous days levels, and also if you look at the stock movement, then after consolidation, this up move have started. Intraday correction is there, but nevertheless in positive territory, lot of buying visible.
Oh yes indeed, but there's anything but when it comes to Atlanta. Don't flag the stock off often. What's the buzz, Neelu?
Right. After Makrangi, 1%, now Atlanta's is where the auditors have stepped down from the position, and Pricewaterhouse Chartered Accountant has resigned from the auditor position, saying that the company was not providing significant information to the auditors.
Okay, let's move right on and talk about a stock that is under pressure, and that is Sheela Foam. And what is the view coming in on the charts? How are you looking at this one? In fact, you are seeing a move on the upside at 1440. Would you give it a thumbs up, Rajesh?
Yeah, if you look at the overall structure, the stock is consolidating since last few weeks, and I feel that stock is having good support at around 1400 level. So for investment point of view, if you are looking this stock, one can buy around 1400 kind of level. And on the higher side, until the stock not managed to cross 1570, 1600 level, it will remain in the consolidation zone of 1400 to 1600. So buy on this would be the right strategy to adopt in the Sheela Foam at the current juncture.
Okay, that's Sheela Foam for you. In the meantime, let's pull up Coal India. Continues to look active, Karanya?
Yes, earlier on it was the result impact, then it was brokerages upgrades which started pouring in, and that has been the trend. But now the CLSA and Citi, which have both come in with very optimistic notes about the company. CLSA says that earnings growth outlook has significantly improved. They've lifted the target price from 335 to 360 rupees. Citi, on the other hand, has upgraded their rating altogether to a buy with a target price of 350 rupees. They believe that e-auction volumes could fall on a year-on-year basis. Supply constraints to power sector are also there, but overall the picture looks fairly healthy.
Oh yes indeed it does. So lots of triggers working in favor of Coal India. It's up and away in trade. Let's move on then to a mid-cap stock that's really stealing the show, and that's the BGR Energy. In fact, you can see very strong volumes. Rajesh, from the get-go, this one has been moving smartly. Would you buy?
Yeah, at the current juncture, stock has managed to give breakout of 102 level and form a bullish gap formation on the daily chart. So I feel that the momentum should continue towards 115 to 120 on the high side. And even if you look at the longer term picture, the 92 was the level where it has formed a double bottom kind of formation on the weekly chart. So I feel that stock should move further higher from these levels. One can hold the stock even at the current juncture. One can buy for 115, 120 target.
Looking good. It's a buying opportunity on BGR despite the rally that we've already witnessed. But let's keep it with some of the other movers and shakers in trade today. What should be on your radar? Definitely HDFC Bank, Mubina.
Well, yeah, and it's rallying on some technicalities that have been introduced by SEBI. Firstly, they have said that the 6 lakh window is going to be discontinued. This, remember, was an FI trading window available for those stocks and for those FIs who wish to trade in FI restricted stocks. That means where the FI investment limit has already been breached. Naturally, such stocks would carry a lot of premium during the FI trading window. But now with this window being shut, it looks like the premium will be diminished, and FIs will be forced to sell their shareholders to local players now, and the premium factor will be diminished. Of course, on the 1st of June, they are going to open up the window where FIs can trade, and we have Macquarie, in fact, which is expecting a trade worth $1 billion in this counter. Today, the stock is up 2.7%. Even in the ADR, the stock was rallying.
Okay, so that's one large cap that's clearly doing its bit, and HDFC Bank is looking smart on your screens. Well, we've got 20 down, 10 more to go. Let's talk about all the buzzers. CRISIL buzzing on the downside. That's a pretty massive gash. And from the get-go, the stock has been one of the big drags on the index. The reason being, the SEBI has allowed the debt issuers to review the credit rating by agencies. A move such as this is going to check the menace, as they describe it, of rating shopping and the pick and choose approach. 1766 on CRISIL as we speak. Let's move right on and talk about a metal counter, and that is SAIL. What were the results like, Pranay?
Well, for the second consecutive quarter, they've now posted a profit, and which is over 800 crores this time versus a loss of about 780 crores that they had clocked same quarter last year. And that comes on the back of revenue growth of 34%. So utilization have been solid, the capacities are running at full steam. In fact, they had record production this year and also in Q4, and they believe that this momentum will continue going forward as well, according to the management.
Okay, there you have it. That's a view coming in on sale based on the kind of numbers that they delivered. Well, let's shift gears and talk about a stock that's been seeing relentless selling pressure for the past 3 straight trading days, and that is Bilcon. Despite the fact that the management has come out on the exchanges and given clarifications, no reprieve in sight. We'll just run you through what the management is saying. They say that there are false rumors against the company. They've released details on the Shem Group deal and saying that there are only rumors that are going about, but nonetheless, the stock is hammered, and as we speak, quoting at 814. Meantime, let's talk about another stock that's under pressure, and that's Crompton Greaves Path. Siddharth?
15% down, exactly 1 year before, 29th of May. Also, 2017, the stock has shown same sort of momentum. Again, only surprised that was because of numbers, and stock is showing volumes which are comparable to May 2017. So certainly under pressure, shorting in future segment, and strong volumes in cash market.
Okay, that is a stock that's down and out, but in the meantime, in the metal space, Tata Steel is standing out, Neelu.
Definitely, Avan, as Moody's upgrades Tata Steel UK holding ratings to B2 with a stable outlook. This upgrade was on the base that they are expecting the credit growth to continue and to be, in fact, better going forward. So that is the reason the stock took off really well in the early trading session, but is right now under some pressure.
Okay, that's the word coming in on Tata Steel, giving up those early gains, currently trading at about 575. Moving on, Rajesh, let's talk about Punj Lloyd. How are you reading this kind of momentum on the charts?
Yeah, we have witnessed a very stellar performance in today's trade also in the Punj Lloyd. But again, I feel that overall structure is weak for Punj Lloyd. But on the higher side, I feel that this upside momentum will continue towards 21 or 23. So one should use this opportunity, really as a great opportunity. 23 is likely to act as a tough hurdle for the stock. So one can book profits or one can exit from the stock at those levels.
Okay, that's the word coming in. For now, you could see a little bit of momentum, but the undertone of the stock seems to be a bit negative. Finally, let's move on to the last few stocks that are buzzing, and Infibeam and focus on numbers.
Yes, and it's not actually been a good set, Avan, this time around, but despite that, the stock is managing to do pretty okay in today's trading session. The margins have up from 14.1% to 8.1%. Profits were down 12%. Revenue was down 12%. Even the EBITDA performance was not up to the mark, but clearly we're seeing the stock rally for 5th day on the trot, not responding at all to the weak set of numbers.
All right, clearly it seems to be bucking the trend, not really paying heed to the kind of numbers that it delivered. Moving right on, let's focus in on Reliance Naval. That stock continues to remain in focus. What is the reading on the charts? Do you think that the stock is likely to see selling pressure continuing, Rajesh?
Yeah, stock is in negative zone, and I think any pullback will meet to the supply on a higher side. So there is no such positivity on the chart front. So one can use whatever pullback is coming should be used as an exit opportunity. Stock is likely to face a resistance around 19 or 20 level, which is very tough hurdle for the stock to cross in the near term to short term basis. On the lower side, 12 is the support area. So I feel stock will remain in range of 12 rupees to 19 rupees. This could be the possible range we can see for few more time in the stock.
12 to 19 could be a range for the stock. Meantime, the last 2 stocks that should be on your radar, and we said this yesterday, Mubina, ONGC on the back of earnings.
Well, yeah, it's a mixed bag delivered by ONGC, but I guess Wall Street was impressed is with the fact that brokerages, however, gave their thumbs up. Remember, realizations as well were in line with estimates. But yeah, talking about brokerages, CLSA firstly was quite optimistic. In fact, they also raised the target from $225 to about $240 per share. Most importantly, they believe that the risk-reward ratio is now attractive, and the stock price, as it is trading currently at a level of 178 rupees, seems to be taking into account Brent prices at $53 per barrel, and with Brent now at $80 per barrel or close to it thereabouts, there's clearly more room for rally when it comes to ONGC.
Okay, and finally, Max Financial, Siddharth.
Well, this NBFC space is showing decent volume, 3 weeks high volume in today's trading session, and I understand this is an expiry week or an expiry day, and we are seeing a decent volume and OI built up in future segment as well, forming a higher top, higher bottom structure after almost a year of downturn. That's a positive.
Okay, with that, we'd like to take time out to thank everyone for joining in today on the show. Rajesh, it's been great having you with us. That wraps up Market Fatafat. Frontline indices in green. The market action continues on closing trades.